Hi, I'm Tai Hui, the Chief Market Strategist for Asia Pacific at JP Morgan Asset Management. And thank you as always for giving us a few minutes of your time to understand what investors in APAC are thinking right now and what does that mean for your portfolio construction. So in this episode, I'm delighted to be joined by Joe Wilson, who is our lead portfolio manager for the JP Morgan US technology strategy. He's also a co-portfolio manager of the JP Morgan large cap growth strategy. So Joe, welcome to Asia, welcome to Hong Kong. Glad to have you in our part of the world. Welcome.
Thank you for having me. It's awesome to be here.
So let's start with, I think, the burning questions from a lot of our clients and investors in Asia, which is, U.S. equities, especially in technologies, have a bit of a rough start to 2025. We've seen some multiple re-ratings on the back of a number of factors, both the U.S. macro picture, but also potential competition from China. What's your take on this in terms of the correction? And are you still confident about the AI opportunity for tech companies in the U.S.?
Yeah, great question. I think, first we have to appreciate that, the last 2 years were pretty good. In fact, the last, 4 out of the last 5 years have been pretty awesome from a tech perspective, a tech investing perspective. There has been increased volatility in the last, just call it last month, but year to date for sure. And I think people are noticing. As a growth investor, as a growth tech investor, it's not uncommon, the feeling of volatility for me. And, if we go back, since 2000, almost on a regular cadence, every 2 years, you see a pullback in tech that can be and feel pretty aggressive, and at some points pretty scary. But it's a natural part of the cycle. And one thing I do is I look at NASDAQ versus S&P 500 performance, and on average, every 2 years, you see a pullback, an underperformance of the NASDAQ, which is a good proxy for tech, of between 6 and 8%. I looked a week ago, I think we were, NASDAQ had underperformed from peak to trough over the last, call it few months, 6.8%. And, so that's pretty much in the realm of like what we've typically seen. And because technology is secular, right? It's growing in its importance, it's growing in our usage on the consumer side and our enterprise lives, you see that. These pullbacks tend to be good opportunities to actually start putting money to work. And, with that belief that tech, I feel like it's the dirty secret that I know and I'm trying to share with the world, but that technology isn't a sector, that a sector strategy, it's a secular strategy. I feel that in the next, partially because AI is an accelerant of this trend, in the next 3, 5, 10 years, the very best company in financials, the best company in industrials, the best company in healthcare or pharmaceutical, it's going to be a technology company. It might not be classified by S&P or Russell as a technology company, and we can argue about classifications even today. It's messy, but the very best companies in each of these verticals will be technology enabled. Technology will be the tip of the spear of that, what helps them disrupt, a legacy market or a legacy leader. That's why I'm really excited about the strategy over a longer period of time, and why I'm excited about this opportunity of when we get volatility to lean into it.
Yeah, no, I think we often use a lot of historical examples on how technology facilitates not just the tech itself, but a lot of the economic activities that we look at. So I think that's a really important point about not just thinking about tech as a sector or a strict classification, but rather what can tech enable,
right,
and who can benefit from that. Now, if I just look back to, the last 2 or 3 months, part of that correction that we saw in US tech sector or technology in general, to China's emergence of DeepSeek DeepSeek as a as one of the AI models, but a broader emergence of Chinese AI industry, I think that creates a lot of questions on the global AI sector in development. Do we need so much or so many GPUs, et cetera, et cetera? What's your view on China's recent breakthrough in the AI industry?
Yeah, I think it's great. I don't necessarily think of it as these different regional battles. What's impressive is that what DeepSeek found was a great consumer product fit, and they leveraged and developed some innovations that that raised the bar on competition. And whether that's DeepSeek versus OpenAI or DeepSeek versus Llama, it's the same thing in the U.S. where there's already a handful of companies that are developing large language models. This is a global competition. It's not defined by the borders of one country. But what DeepSeek doing what it did, given that there's been trade embargoes on advanced chips, and I think there's been lots of arguments on how many chips that they actually did have from before the embargo, and what's still impressive about what DeepSeek showed was there's three things. One of them was on reinforcement learning and the way that they train the model and its efficiency, test time compute scaling, which is the thinking portion, and the fact that they actually show you the output of all the tokens that are being generated, and the way that that model is developing its answer to your query. That was impressive. But maybe the most impressive is that they didn't keep this internally. This is an open source large language model. This was kind of given to the world. And I think that is what is really, truly exciting. I mean, we've even seen US companies that are starting to leverage this, and that lowers the cost to implement AI across software applications, consumer services, and we're going to see more of that. I think we'll most likely see Meta, in a very similar fashion, launch a version of Llama, which will increase the number of open source models on the advanced side. That's exciting because it lowers the cost of AI, it drives efficiencies, and it drives usage ultimately.
So it's actually interesting you mentioned about the semiconductors and some people call it the shovel to the gold rush when it comes to GPU. There's been a lot of focus on GPU as a key AI enabler. Do you see this dominance continue, especially as you mentioned earlier, in the context of DeepSeek, which it may or may not require the very top end of processing power, but it could be making use of more generic or simpler processing units? Or are there any other emerging trends that investors should be aware of?
Yeah, it's whether we call it GPU or accelerated compute processing, it is clear that this is the dominant form of compute and a new era of compute platforms, and it's one that it is driving the training workloads and the inferencing workloads around AI. There's one company that has been most dominant. It's because they've been very early, and they've created a huge software developer ecosystem, which is absolutely incredible. And I think that's great for exploration and for enterprises and for the hyperscalers themselves, who don't have as much experience, but to be able to adopt systems, right? This goes beyond just GPUs. These are full systems now. But giving them a quick time to market. But what I do think is important to at least appreciate and have some humility in is what we are seeing in these early stages, and I do feel like it's still day one in terms of the progression of AI, is that the composition of processors could change, and over time. Some of the biggest customers of NVIDIA have large balance sheets, and the majority of them are all in programs to develop their own custom ASICs. right? So that's designing a chip, taking it, borrowing IP from a partner, maybe that's Marvell or Avago, or I'm sorry, Broadcom, old habits, Broadcom, and then having that manufactured at TSM, and they're doing that because I don't think they want to be beholden to one provider over a long period of time, and I think they're also planning on having stability in workloads in the future. And so as they do this work today, well, AI is changing dramatically, or changing rapidly, and the composition is changing rapidly. I think in the future they plan on workloads being more stable, more predictable, and that is where I think ASICs, custom silicon from the hyperscalers, will become more prevalent. The other aspect of this as well too is that we're moving from a world that is primarily one where we are building infrastructure for training to one where consumers are adopting this at a pretty rapid pace, and we're using a lot of inferencing. I'm not sure that the software moats and the ecosystem that has been developed necessarily holds in that future of more inference. And there we might see more competition, whether that comes from other GPU providers or other chip providers, and or maybe that's the world where ASICs find their best fit. But that's something that we have to appreciate over the next few years and really think about. And then you bring up the point about DeepSeek, and I think largely they probably leveraged a lot of NVIDIA's footprint, and the H20 is still available in China, and that is where a lot of the Chinese hyperscalers are focusing their capital spend on today. But what technology companies are really good at is working around roadblocks. And so I think of China has a roadblock in terms of not having advanced semis coming from the US. How do they work around that? What are the discoveries that they find? And I think that that is what is really exciting is that technology companies don't see themselves necessarily limited, right? They're problem solvers, and they're trying to figure out ways that they can achieve leadership and success or equivalency in maybe utilizing different infrastructure or different tools, and that can create some awesome breakthroughs as well.
I think one thing I keep telling clients across Asia is a lot of the potential services or applications of artificial intelligence, or more broadly just technology, in 3 or 5 years' time is not being invented yet. Not so much the technology is not there, but sometimes the hardware is a constraint. I mean, I often use the example of streaming. If we use the old 56K modem,
right,
several decades ago to download a movie, I calculated it takes about 10 hours. But if you use your phone or your laptop or your tablets, right now it takes a couple of minutes. So I think the hardware developments alongside with the software and service developments, they have to go hand in hand. And what we could be using AI for in a few years' time, I think will be out of our current imagination, because with our given hardware, it's not really quite there yet.
Yeah, I actually love that, that's the creativity element of investing. And we were, our first investment in NVIDIA was in early 2016, and it required a lot of creativity in trying to, imagine what the market size would be. But there was many people that we ran across at that time when we were doing work. One of them was, a founder, an early resident of Google Brain, Greg Corrado, who came in and said, computers can now see and hear for the first time ever better than a human. And he looked around the room in silence and said, think about that. And that was a pretty awesome insight, and very simple. But that's what led us into being more optimistic around the data that Elon was collecting at Tesla, and the ability for Tesla to lead the charge in full self-driving. It led us to think differently about how Meta might leverage a lot of the information for targeting of ads and ad relevancy. It's something that they didn't really need until Apple pulled the plug on web history in 2020. But I think that today, I just think about the role that AI plays in our lives, and it's, our usage isn't at a frequency that is, similar or matches, for example, like the amount of Google searching that I do. But eventually it will. And I think we'll actually surpass the amount of AI inferencing than we have internet time. And if you have a chance, I don't know if you've ever tried the Meta Ray-Ban sunglasses.
Not yet.
Okay.
I'd love to.
So they last for 4 hours. There's a video camera on it, a static camera, microphones, and speakers in the temple frames. And wearing those, you realize that the new mode of communication, of our communication and interaction with compute, might be more voice operated. Wearing those, it makes you think and appreciate, maybe we're looking down at our screens a little bit too often. But if you take that a step further, right now, if you're wearing the glasses, you say, hey Meta, tell me what I'm looking at. Or hey Meta, translate this into English for me. And it can do that very well. But there'll be a point in time where you don't have to say hey Meta anymore. It's just inferencing your daily life. And it sounds like a total intrusion in privacy. But I imagine this world where it's not necessarily recording sound, it's not recording video, but it's inferencing the important things that you come across in your life, right? When my wife tells me, hey, don't forget to pick your son up, our son up at 3 o'clock tomorrow after school, there'll be a point in time where if AI didn't capture that for me and didn't remind me at 2:45 to go leave and pick up my son, technology let me down, AI let me down. Today it sounds like it may be an intrusion of privacy, but there's these pathways where just humans feel more and more comfortable with the interactions that we have with the digital world around us, and I think we're going to be at a point in time where AI and Meta or whoever rules won't let me forget that I need to pick my son up at 3 o'clock.
Actually, that's a great segue, because if you look back to technology in the US and globally in the past half century, we've been through waves from personal computers to the internet to e-commerce to social media, and now in this AI era. I mean, you touch on a number of factors or number of potential opportunities, whether it's in the semiconductors, some of the immediate services. Where else are you looking at when it comes to trying to extract the opportunities on the more broad AI development?
We're looking everywhere, to be honest, and I think we have to have a very wide view here, because it's not necessarily going to be obvious. The way that we think, you bring up a great point about these different eras of platforms, mainframe, PC, internet, mobile cloud. We're going through a major transition. It's a new platform, and when that happens, there is massive disruption in the market cap leaders, in tech, but across many other verticals as well too. And I expect major disruption in the market cap leader table, even from especially from 2020, but even if we were to take the snapshot today, like those companies that were the leaders in one era, it's very hard to maintain that leadership, and leaders lose their leadership for one of two reasons. One is that they make a misstep and they lose their market. The second one is that they just can't pivot to the next one. They become, the markets that they serve become irrelevant. And if we would have if we were to take a time machine back to 1985 and you ask anybody who's going to rule technology for the next 50 years, everybody would have said IBM. IBM is still really good at mainframe compute, but they weren't able to pivot to PC and internet and mobile cloud. They missed that boat. The profit pools that came in the next cycle, in the next S curve, were far larger, magnitudes larger. And I think that same thing is going to happen with AI. That's what I love about the strategy that I manage is that we will look at everything and everywhere to identify where that next leader is going to be. NVIDIA had been one of our top holdings for a very long time. NVIDIA didn't look like a leader in 2016. Mm-hmm. In anything, valuation was modest. Was it a growth name? Was it a value name? The markets that they had penetrated, were slowing down. There wasn't adoption of GPUs in a meaningful way in terms of the income statement outside of gaming. And so having that, this ability to be curious about new topics and new opportunities, and then be creative in terms of thinking about, where they can go, that's really important. And, taking a tech lens, especially to these different verticals, I think is going to be even more important in the future, right? I think there's a lot of pushback. For example, Jensen a few years ago, we were asking him what vertical do you think is going to be the most impacted? And there was no hesitation. He's like healthcare, it's drug discovery and customized health. And, but if you talk to a healthcare analyst, I think there's a lot of skepticism because technology has, been this promise for so long, but, when you start going from, trials in, mice to humans, it's very messy. And so technology, I think, has been, more of a letdown from them. For me, and taking a more optimistic view, believing in some of, the discoveries and, being optimistic about some of the discoveries, I think gives us an opportunity to be earlier, be more curious, become more knowledgeable in that field, and, benefit, our clients in a way that drives significant alpha from that work that we do.
So I think that's a really important and interesting point because obviously you are the lead manager for our tech strategy, but at the same time, mm-hmm. you're also a co-lead manager for our large cap growth strategy. So in a sense where, your career, your expertise may reside in technology, but actually your remit is much broader. And it does highlight the importance of the importance of active management and alpha generation, because at the moment, a lot of investors are looking at the index or looking at the market, and they may be chasing some of the larger names. But what you're saying effectively is, well, there are some companies that could emerge over the next 3-year, 5-year, 10-year, that will capture the benefits of artificial intelligence and technology in general and grow that business to a much larger scale. So on that note, are there anything or any sectors that in your research, in your monitoring, that you think investors are overlooking right now? They're missing out on something that you feel very excited about, but no one's talking about at this point.
First off, just in terms of, where I see some complacency, it is in that belief of just owning, we have a name for it, the Mag 7, and that, the understanding history and the fact that, the leaders, it's very difficult for them to lead in the next generation, the next platform, I think is not appreciated, by investors yet. And that's a huge risk to underperforming the market over the next decade. That's why I have a high amount of conviction, and of course I know I'm talking my book, in active management. And then, in terms of thinking of subsectors, I think we have to have a general interest across, everything and be very watchful. One area that I think is really interesting right now that leverages this next platform is this idea, of what Microsoft calls today, and I think a lot of leaders, would deem as, AI, driving efficiencies. Microsoft labels their AI Copilot. Sounds nice and friendly. It's going to make us all, more efficient. But eventually, I have this belief that Copilot becomes Pilot, and whether that's, digitizing, a lot of, compute and information worker labor. The really big and even maybe more exciting opportunity is going to be physical AI and physical labor. And that's still a few years out, but it's something that we need to pay a lot of attention to. There's going to be massive implications on the industrial side, on the ag side, on manufacturing, and we're advancing at a very, very fast rate. Last year, I was impressed. Jensen ended his keynote with, I think, 9 different robots on stage. 5 to his right and 4 to his left. And this year, from my usage of X, or what was Twitter, there was a huge impression left on people with this interaction that he had with like this robot that was kind of created and formed in simulation. That will be really interesting. I think it will be an eye-opener. If Elon achieves what he wants to at Tesla, by the end of the year, Optimus there'll be thousands of Optimus robots working in the factory. But like the impact that has on a global stage is really important, right? The U.S. has been talking for years about reshoring and onshoring. The reality is I don't think we have the labor quantity. And we might not have the skill set there. This is an obvious, understanding, in Asia as well too, where a lot of manufacturing has been built up. Is that to preserve that is like to continue to push on more efficient labor, and that might be in the form of physical AI or robotics. That's an area that's very exciting. But like Jensen said a few years ago, maybe it's in healthcare as well too. In drug discovery, we've done a few calls with CTOs of some very large drug companies who are starting to implement generative AI on molecular research, and they're having early success, and that keeps me very hopeful that could be the area that's most disruptive. That would be great for the world.
So if we just look back to what we started with, which is the market correction that we've seen in the last couple of weeks, as you highlighted, frankly, that's just part of the cycle. 5, 10, 50% intra-year correction. We've got plenty of materials and charts in the guide to the markets to show you that it happens in any given year, even in some of the best years in the market. So, yes, it does create some anxiety amongst investors, but we have to embrace that volatility to be part of this game. I think the other point, which I think is really important from your perspective, and you mentioned this as well, is that technology keeps evolving. A lot of things that can deliver return to investors may not have been invented yet, or is in the process of being, evolved and improved over time. And as a result of that, it's really important to have someone like you, Joe, who monitors and research in this sector every single day, to understand where are the potential opportunities as well as pitfalls. Maybe some companies getting complacent, they're not making the right move as you mentioned, but maybe some smaller companies or startups have great ideas. So I think when you're looking at technology, it isn't something that we can just simply buy an index and put it away and think about this later. I think there's a lot of room for alpha generation with active management. So Joe, thank you so much for your time, and again, great to have you in Hong Kong, and hope to see you again really soon. And thank you.
Tai, nice, great conversation, and thanks for having me.
And thanks for listening. If you enjoy this podcast, please share this with your friends and colleagues, and of course, consider subscribing. If you have any questions, please feel free to reach out to your JP Morgan Asset Management client advisors. I'm Tai Hui. I'll see you next time to discuss what's on investors' minds.
This content is a general communication being provided for informational purposes only. It is educational in nature and not designed to be taken as advice or a recommendation for any specific investment product, strategy, plan, feature, or other purpose in any jurisdiction, nor is it a commitment from JP Morgan Asset Management or any of its subsidiaries to participate in any of the transactions mentioned herein. Any examples used are generic, hypothetical, and for illustration purposes only. This material does not contain sufficient information to support an investment decision, and it should not be relied upon by you in evaluating the merits of investing in any securities or products. In addition, users should make an independent assessment of the legal, regulatory, tax, credit, and accounting implications and determine, together with their own financial professional, if any investment mentioned herein is believed to be appropriate to their personal goals. Investors should ensure that they obtain all available relevant information before making any investment. Any forecasts, figures, opinions, or investment techniques and strategies set out are for information purposes only based on certain assumptions and current market conditions and are subject to change without prior notice. All information presented herein is considered to be accurate at the time of production, but no warranty of accuracy is given and no liability in respect of any error or omission is accepted. It should be noted that investment involves risks. The value of investments and the income from them may fluctuate in accordance with market conditions and taxation agreements, and investors may not get back the full amount invested. Both past performance and yields are not reliable indicators of current and future results. JP Morgan Asset Management is the brand for the asset management business of JP Morgan Chase and Company and its affiliates worldwide.